Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at the euro on FOMC day. Good old FOMC day coming in, and the euro is one of the markets, along with pretty much everything, that's going to have a very large impact on because of that news. So generally speaking, when you have big news like that coming out, you usually end up getting more of a range. It kind of makes sense. Everybody's waiting for the news, so nobody places any trades. Now, yesterday, we had a relatively decent down day, kind of choppy, more of a range, but with some nice downward momentum in the end of things, right? So with that bearish pressure coming in, we gapped lower on a relatively strong opening candle, right? So that may be seen as a breakout attempt down in an already strong downtrend. Very infrequently will that hold. Most of the time that's going to fail. So there will be buyers that are looking to buy in, but then they never get triggered in. We get a really weak follow-up candle. And then when they finally do, if they bought above that, then they get all the wick on the highs. Something just isn't quite right about this, right? So there will be buyers that did buy here, but when they see that into that, they're probably just going to exit at break even if they can and say, you know what, something's wrong. I'm going to sit on hands and just kind of see what happens. So if you did buy there was a reason to get out at break even. And that starts showing us that, well, you know, this may just turn into a range. And if that is the case, we're fading off of the highs in a bear market. We're looking to go back down to the lows and buy the lows. But because it's a bear market, let the breakout happen and then buy into it after it has happened. Don't try to pick the low on a bear trend. A lot of times that'll bite you, right? So we get this move down, we go into a range for a very long period of time, and we end up trapping a high, right? We push up towards the highs, obvious little swing high, bunch of dojis, very obvious small little range inside here. It pokes its head just above the high and immediately dumps back down to the lows. With the overall bearish sentiment and the fact that the buyers have tried several times to get things going and they completely failed, best looking bear candle of the entire session, guess where we're going, right? We're going probably down to the lows. So very nice sell opportunity on a bull trap to push the market back down into the overall direction of the trend, back to new lows. But we still have clues that this is going to be a trend in terms of short, right? We're looking for a short-term trend to come down to the lows before we start turning into a range. We push down, big break through the lows, huge bear candle, absolutely no follow through, continued bad follow through. Buyers will begin scaling in off of those lows and trying to push the market back up. Now, there is still a bearish trend, so looking for overhead resistance is going to be a likely area where you're going to find some profit taking, right? Buyers will buy here. Buyers will buy down here. Once they hit that area of resistance, they're going to take profit. They're not necessarily looking for a cycle all the way back to the highs right now because the prevailing trend is still there. It's just really weak. So we have that falling area of resistance that comes into play. All of the buyers that bought the lows, they take their profit and they turn back around for a sell right off of that falling resistance, looking for another poke down through the lows. Beautiful move down through the lows as well. Nice little smack lower, but then look what happens on that candle that broke out through the bottom. Now we're starting to get clues that, wait a minute, all the buyers exited. This should have been able to just hammer lower. And it doesn't, right? That's the follow through the sellers get. That's not what they want to see, right? That's really bad follow through, and we're very likely starting to see a range. We have a double bottom earlier. They're failing a breakout now at the bottom. They may be coming back for a double top now. That is a beautiful reason to get a little more aggressive on the buy side, assuming failure to push the market back up. We have a massive bull follow through and they get continuation as well. So everything is pointing to the upside. And now guess where we are? We're right back at the highs. This is a beautiful opportunity to potentially sell and scale in for a move right back down again. So overall, very interesting day. And whenever it comes to FOMC, a lot of traders just won't trade until the news comes out. So there's good likely going to be a lot of opportunity later today. But for the morning session, us US session scalpers and swing traders, yeah, well, this is all we had to work with. So just a beautiful combination of technical analysis in combination with market psychology on an otherwise kind of difficult day to trade. So that's going to do it for this one. Hopefully you found it interesting. At least hopefully you learned something, and we'll see you next time.